Pensford letter is great as always, and it's unfortunate that we happen to be right because we've been saying this for a long time. We've been saying that inflation is not as sticky as the Fed has been claiming. We've been saying that the numbers are going to turn. We've been saying that the labor market is not as strong as people claim it to be, particularly how the Fed claims it to be, right? And so, as we talked about last week, the Fed tends to under project the path of rising interest rates, and then they pretend to under project the path of declining interest rates. And so that's what we're headed into. We're now headed into the easing cycle, which is going to begin in September. September is going to be the first cuts, and then we're off to the races. So we kind of all knew that. My prediction almost a year ago was that the first cut was going to happen in May, but I was giving the Fed too much credit because I thought, like they claimed, that they would be data dependent. The data was saying that they should cut in May or June, and they've been holding off. But I can't be so negative on the Fed because they have to kind of always provide a head fake, because if the market feels like they have the Fed figured out, then the market is going to loosen financial conditions in anticipation of rates, and then that rate cuts. And then that defeats the purpose of hiked rates, right? Because the Fed needs to talk up. No, we're going to keep rates high forever. We're going to keep rates high forever because they want to bring pessimism to the market, because they want to cool it down. They want to cool the job market. They want to cool inflation. And they've succeeded. And I think they've succeeded so well that we're going to have a recession. And they are basically cooling the market so much that prices are coming down, and the job market is not hot. If you really look at the numbers, and if you look at non-government jobs, there's actually not a ton of hiring going on. So that is a concern. And so for me, while as a real estate guy, I'm excited about rate cuts, and I'm excited about the interest rates that we're going to be able to borrow at now and coming soon, I worry about the NOI of our properties. I worry about, okay, well, if we do have a recession, how are our tenants going to be affected? Are they going to be able to pay rent? Are we going to be able to raise rents? Are we going to be able to collect? Are we going to have a delinquency problem? So I don't worry about, I don't lose sleep over it. Like, I don't think that that's going to have a major impact. I also don't think it's going to be a major recession. But building on your point, I don't think that the Fed starting to cut rates in September is just a get out of jail free card for everyone who's got problems in real estate, and that's valuations are going to the moon.